I am Kaushal, founder of CastleGate Capital. We've developed our flagship product, the Dual Momentum, a research-backed model that uses absolute and relative momentum to identify strength and systematically beat the benchmark. It's a model that's been backtested, benchmarked, and stress-tested through the toughest cycles. While Nifty 50 index delivered a total return of about 99.75% and an average CAGR of approximately 18% between 2020 and 2025, our dual momentum product has delivered an average return of above 35% per annum across multiple market universes. These are the backtest performance graphs and key metrics. It comprises 4 livable strategies, each running the same rules on a distinct NSE universe: dual momentum Nifty 50, dual momentum midcap 150, dual momentum small cap 250, and dual momentum microcap 250. Every detail of our dual momentum framework is documented in a comprehensive strategy document outlining its logic, parameters, and methodology in full transparency. Dual Momentum is inspired by Gary Antonacci's landmark book, Dual Momentum Investing, and decades of empirical evidence on momentum, including research popularized by AQR Capital. Dual Momentum rests on a simple foundation: 2 filters that define the starting point for every decision. The first, the absolute momentum filter, compares each stock's return to the risk-free rate, the 91-day treasury bill yield. Only those that outperform make the cut. The second, the relative momentum filter, ranks the survivors by their 12-month returns and selects the top 20. What makes CastleGate's approach distinct is what comes next. After leadership is identified, the model evaluates the market regime through 6 carefully selected indicators. Each regime filter has a specific role. The 14-day moving average slope identifies the near-term trend direction. ADX measures the strength of that trend. ATR ratio captures volatility surges that precede reversals. VIX behavior tracks fear and complacency cycle. Market breadth ensures leadership is not concentrated in a few names. Advanced decline ratio verifies daily participation. Together, these 6 create a regime score that signals whether conditions are supportive or risky. They read volatility, participation, and sentiment together, helping the model know when the regime is healthy and when it's not. This regime awareness gives dual momentum its edge. It participates when the environment supports risk and steps back when it doesn't. To manage the portfolio efficiently, we follow a structured rebalancing approach. Minor rebalances are performed daily, ensuring each stock maintains equal weight and small drifts are corrected in real time. This keeps the portfolio aligned and responsive to daily market movements. Major rebalances are done every Friday. This timing aligns with weekly liquidity and reduced noise, allowing the model to capture meaningful trend shifts while avoiding overtrading. To ensure capital safety, we also use a 5% stop loss at both stock and portfolio level, keeping drawdowns under control while maintaining flexibility to recover quickly. The dual momentum product was backtested across 5 years, from 2020 through 2025, a cycle that included a pandemic crash, record recoveries, and volatile sideways markets. Over this period, total returns and compounded growth rates were exceptional. Nifty 50 total return 227.34%, CAGR 24.91%, midcap 150 total return 411.79%, CAGR 35.84%, small cap 250 total return 410.58%, CAGR 35.78%, and microcap 250 total return 927.27%, CAGR 54.81%. Across these universes, the data tells a consistent story. As we move from large cap to micro cap, returns rise steeply while risk stays proportionately managed. Sharpe and Sortino ratios remain strong across tiers, showing superior risk-adjusted returns. Win rate averages above 60% and profit factor exceeds 2 across all baskets, underscoring steady trading efficiency. Drawdowns, even during extreme phases, remained under control thanks to regime filters and stop-loss integration. The outcome is clear: a robust, multi-cap framework capable of serving conservative investors through large cap exposure and aggressive ones through small and micro cap layers, all driven by the same consistent logic. Few advisory products can claim this depth of performance and flexibility within a single quantitative architecture. The backtests are designed to meet institutional standards while maintaining practical execution accuracy. They leverage real historical index constituents, ensuring each period's simulation uses the stocks that actually existed then, eliminating survivorship bias. The tests include corporate actions and delistings, adjusted in price and quantity to reflect real investable conditions. Our performance analytics are rich and institutional grade, covering metrics such as Sharpe, Sortino, tracking error, and value at risk, allowing for portfolio evaluation at professional depth. The framework can backtest complex realistic logic, combining dual momentum, six-factor regime scoring, and structured rebalancing over a long, consistent period of 5 years that spans multiple market regimes. Every backtest is fully logged and transparent, version controlled, and reproducible through Wizzer SDK. Whether you want to learn how dual momentum works, trade it yourself, or have CastleGate manage it for you, click the link in the description and fill out this form.